Hey everyone, CryptoVatsik here with a technical analysis video for you today. Nothing of what you're about to see is considered financial advice and they're just in my opinions. If you do enjoy this content, I would really appreciate it if you gave this video a like and don't forget to subscribe. Let's jump right into it. Okay, today I'm going to cover Sand. It's been about 2 months since my last video on it, and everything you see currently on the chart are from that previous video. And just to recap a little bit before we get into the current price action, is I had marked out 3 major key levels. The first one being right here at about 98 cents, which came from this previous swing high and marked a form of a bottom for quite some time thereafter. The second level of interest for me was at 58 cents, which I personally chose just because there was a lot of interaction with this level, either as resistance or support on the previous run up, flipping it into support that led to the all-time high. And then of course when we consolidated on that level back here in November, December. Now the third level that I had marked out down here was at 36 cents. Again, just an area of interest for me from historic price action and was my ultimate bearish target when we were trading back here in December before this breakdown. And my expectation was that if we were not able to hold that 57-cent level that I had marked out, then my expectation was we would drop down towards this 35-36 level. And on the basis that we were not able to reclaim and hold 57 cents, it was a clear trigger for this capitulation event that we got. And for the most part followed this squiggly. Sure, that's fine. No big deal, really. Honestly, it's just a squiggly. But the theory was that we had this 36-cent level down here. That was my next major macro area of interest. But you'll notice from that previous video, I had also talked about this descending channel. And just for a moment, let me get rid of the quarter channel here. So my added piece of confluence was this channel equilibrium right here on the dashed line. So I had said I would look for a retest or revisit of that equilibrium and a revisit of this 36-cent ballpark. And you'll notice at one point we did revisit the equilibrium here briefly. So it could have tricked a lot of traders into thinking that was the temporary bottom. However, I was still waiting very patiently because we had quite the gap between price and that 36-cent level. So you'll notice on the convergence of those two areas of confluence is the ballpark that price ended up bottoming in, or at least very close to the convergence. And just like nobody sells the Pico top, nobody buys the Pico bottom. But as long as you can identify a bottom that is starting to form and a zone in which you expect a bottom to form, then you can catch most of the move. And that's ideally all we can do as traders. Now, the other thing I will note, which I like to personally do, that I don't see typically a lot of traders doing, is I like to mark out the quarter ranges. So we'll take the parallel channel tool and we'll extend it down just to the equilibrium, giving us the quarter range EQ here at 25%, which is within the upper 50th percentile of the overall range or channel, because I think it really tells a story to the trend reversal that we got. So I know it's quite busy and I'll get into this stuff up here in a second, but I just want to bring your attention to the price action right here within that quarter range. So again, we had that area of consolidation. We broke down from that 57-cent level. We capitulated down to the EQ of the overall range or channel, and then we came down and swept that 36 level zone. We then had a bearish trend break with the upside bullish retest right here. So that was signal 1. Actually, I'll say signal 1 was a clean retest of this macro channel EQ and sweep of that 36-cent level. And then the second signal was that bearish trend break right here. The third signal is a clean market structure break from this prior high, printing a convincingly strong new high. But in that previous video, I said one really critical piece of information. And I actually said it back here when we were trading at the time of that video. And that's where these 3 targets come into play here with the messy writing. I had said a reclaim of this quarter equilibrium from that quarter range, if you remember. On a reclaim of that, I think we push toward the 73-cent level. And that was denoted here by my T1 target 1 mark. Now, of course, at the time thereafter, we did not get that. So the trade from this standpoint was invalidated at the time when we capitulated. However, you'll notice when we had this fresh new high, we clearly reclaimed that equilibrium. So the obvious target at that point is then a tap of the upper band of this overall downward sloping channel. But it was really just a matter of time until we broke it to the upside. And so I had marked out my T1, my T2, and T3 targets for a bullish push. So we got the reclaim of the EQ, we pushed up and immediately broke outside of that falling channel. We got my target 1, which got tapped here in mid-January. And then we actually briefly got my target 2 as well here over in early February. And the reason why I use multiple targets is because I'll take most off the table at your T1 level and then a pretty significant level off the table at your T2, leaving, 10, 15, 20% for your T3 on account that just in case it continues to push. However, I can't really take credit for that trade because because when I explained the trade, I explained it from back here. So I knew a bottom was going to form. I was leaning towards the bearish case, which is what we ended up getting. But I had said if somehow this does form some sort of bottom and the low holds and we reclaim that EQ, then essentially that was my target for that trade at the time. So even though we did end up getting that later, I can't really take any credit for it. But it is nice to see that the levels are being respected. The trade theory was accurate and we eventually did get that push. So now bringing your attention to the red line here. This was that key support resistance level marked out from all the way back here beginning in mid-June to our next visit of that level here in October. And I had said on a macro level, a reclaim of that key SR price would be really bullish in my opinion. So I've left that level on the chart and you'll notice that it ended up being our February monthly open, which in my opinion has yet to decide if it's support or resistance. This is a very much indecisive price action, and with currently from a technical standpoint, a loss of that level and trading underneath it. But just with the amount of chop underneath and above, I think it has yet to decide if it's going to hold or not. Meaning essentially a test again of that 57 cent level is very much in the cards. I think the bulls definitely want to hold 57 cents. I'm going to make that my directional control point. Meaning I think if you're a bull, you want to see price stay above that level. I think in the interim, a loss of the February monthly open, which was that key support resistance that we are trying to flip back into resistance after trading underneath of it for some time, I think it'd be perfectly fine to temporarily lose it. We trade lower, we test 57 cents, we fill in some of this liquidity, and then perhaps after that, we reclaim the monthly open key SR level. February monthly open, keep in mind. That's definitely a scenario I'm considering. Now, the vice versa, if price reclaims the level with confidence, we sweep the 200 EMA, we consolidate a little bit longer underneath the 200 EMA, however, above that 73 cent SR level, then that's a good opportunity to break out above the EMAs on a high time frame perspective and start targeting some higher swings, such as $1.30. But given the current price action, I am leaning towards a sweep of liquidity down towards this 57 level first, and then some structure that looks like this just a little bit later. I could be wrong, it could happen sooner, or we could come back down to this 57 cent level DCP point and quite possibly even lose it. So everything's on the table still at this point, but essentially those are your plan A and plan B, so to speak. I mean, it would make a lot of sense for me to retest this 57 cents just from a Fibonacci standpoint, taking it from the low to the high of the current leg and seeing that 618 zone sitting right on top of that key price point. It would just make a lot of sense for at least a quick visit back down to that level. Even if this is bullish from a macro standpoint, I think it is just a matter of time before we get the next rally up. But keeping in mind those accumulation phases that really do take time, and as price continues to chop around and do something like this, that very much starts looking like an accumulation phase where the real breakout is going to be very powerful. So in the short term, if this does end up being bearish, even if we lose that 57 cent directional control point level, we come back down to the lows. In my opinion, it's just a gift and furthered opportunity to accumulate those coins that you want to hold for the long term. But it doesn't mean it can't be lucrative to trade it in the interim. A move from this key SR level up to these targets ranges from around 24% to 34%, all the way up to potentially, 70+%. But your risk has to be very precise and your entries have to be very much on point. So just stay very cautious with price action like this. Anyways, that's going to wrap up this video. Thanks again for joining. I'm excited to see what will happen over the coming few weeks and months and how this is going to develop. Happy trading, trade safely, stay objective, plan the trade the plan. If you took something away from this video, I'd really appreciate it again if you hit the like button, and of course don't forget to subscribe for future updates. Go follow me on Twitter for frequent trading ideas and some pretty terrible humor that I'm pretty sure only I and a few of my followers think is funny. But either way, go check me out and let me know what you think of Sand in the comments, long term, short term, what your TA shows, what you're seeing. I want to hear from you, so let me know, and we'll see you in a couple days. Catch you all then.